every chart scanned overnight, the Charles Schwab Corporation ranked highest. Bias, long. Entry, target, and stop are at the end. Let's earn them with the evidence first. New here? One scored setup every single day. Subscribe, like, and share to keep the streak alive. Structure today: patterns first, indicators second, institutional read third, and the trade plan closes it out. Let's start with the chart. Here's the daily chart. 60 bars of context. Price action is in an uptrend of moderate strength. That's our primary directional bias right out of the gate. You can see the dotted lines on the chart. Green is our TP at $113. Red is our SL at $103. Those are the two numbers that matter most in this whole video. Now this is the fun part. The pattern detector picked up two chart patterns on the daily: double bottom, bull flag. I'm going to walk you through each one in the next slides and show you exactly where they formed on the price action. Pay attention to the labeled points. Those are the swings that confirm the pattern is real. Quick one before we dig in. If you're new here, the scan drops every single day. One tap, it's free. Pattern number one, this is the double bottom. It's a bullish formation with 2 out of 3 strength. 2 troughs. 87.57. Measured move target 97.55. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is 9.7%. That's the typical decline once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Pattern number 2, this is the bull flag. It's a bullish formation with 2 out of 3 strength. Flagpole plus 112.6%, then tight consolidation. Bullish continuation. You can see on the chart exactly where the key swings line up. That's what confirms the structure, not just my word for it. The textbook measured move projection is plus 112.6%. That's the typical rally once the pattern fully completes. It's a guide, not a guarantee, so we still need our SL in place. Let's talk key levels. Every trade is really a conversation between support and resistance. On this slide, you've got 2 resistance levels above price, 2 support levels below, plus our TP and SL inside that range. If price breaks above R1 cleanly and holds it, that's the green light for the upside scenario. If it cracks below S1 instead, the long thesis is broken and you stand aside. The TP and SL aren't arbitrary numbers. They sit at logical inflection points, which is why this map matters more than any single indicator. On to the indicators. We've got composite score of plum 0.59, technical 0.109. Positive numbers lean bullish, negative numbers lean bearish. And what you're really looking for is agreement across multiple boxes, not just one indicator screaming. ADX is at 38, and that tells us we're in a strong trend regime. Important because some strategies only work when ADX is above 25. On-balance volume is bullish. That's a sneaky good way to spot whether the smart money is buying or selling underneath the price action. Now we switch lenses. Retail view done. If the institutions aren't on the same side, none of it matters. Smart money concepts. Let's check. On the daily chart, the SMC bias is bullish, with an uptrend market structure. The most recent order block is a bearish zone between 130 and 103 to 109 turns. That's where institutional orders are likely parked. We've also got an unfilled bullish fair value gap between $104.82 and $105.05. Price tends to revisit these imbalances. Most importantly, we just had a bullish move at $99.42. A key structural signal that smart money traders watch closely. Let's add volume profile. High volume prices attract. Low volume pockets get crossed fast. The point of control, the most traded price, is at $92.68. The value area runs from 88.108 on the low side to 96.96 on the high side. meaning 70% of all volume traded inside that zone. The signal here is bullish. Price 107.99 is above value area high, 96.96. Trading above VAH indicates bullish strength. POC at 92.68 is key magnet support. Let's check order flow. Who's been pressing? Buyers or sellers? Candle by candle. Over the recent window, buying pressure accounts for 67% of volume versus 33% selling. The overall flow signal is bullish. And to round out the indicator suite, 3 more advanced reads. Money Flow Index, the volume-weighted RSI, reads 67, signal neutral. Williams %R is at 13, bearish. Chaikin Money Flow reads Pli.13, bullish. Together, these 3 confirm whether the volume's actually backing the price move or whether it's just speculative noise. Now, even though this is a technical analysis channel, we always sanity check the fundamentals. Here, revenue's growing 21% year over year. That matters because it tells us whether the chart is rhyming with the underlying business, which is when the highest conviction setups happen. Context check. What's the overall market doing? On this slide, you've got the primary trend, its strength, the ADX number, and the volatility regime measured as ATR%. Here's the thing. A setup that looks textbook in isolation can totally fail if the broader regime is fighting it. So you want to ask, is this trade swimming with the market current or against it? The 5-day and 20-day moves at the bottom answer that. News and sentiment are mixed right now. No dominant story pulling price one way or the other. When that happens, we just lean on the chart and trust the levels we drew earlier. Levels in about a minute. If this format works for you, join the channel. It's daily. Now, the slide nobody on YouTube actually talks about. Risk management. On screen, you see the dollar risk per share, the dollar reward per share, and a position sizing table built around the 1% rule. The rule is dead simple. Never risk more than 1% of your total account on a single trade. So if you've got a $10,000 account, you're risking $100 max. And that decides the share count, not your gut feel. Get this right, and you can be wrong 10 times in a row and still be in the game. Get it wrong, and one bad trade can take you out. All right, you've seen the evidence. Here's the trade. Bias is long. We'd look to enter near $108. Take profit sits at $113. Stop loss at $103. That puts us at 1.10 to 1 risk to reward, meaning for every dollar we put at risk, we stand to make 1.10. Horizon is roughly FVGs. That's the play. One more time. This is educational, not financial advice. Markets are risky. Trade your own plan. Never risk what you can't afford to lose. Comment the ticker you want scanned next. I read everyone. And subscribe for tomorrow's breakdown. So zoom out for a second. What we just walked through on SCHW, that's a long bias setup projecting roughly 5.0% from here. And here's why it matters. Every piece we looked at, the chart structure, the candle confirmation, the indicators, the institutional order blocks, the volume profile, the order flow, they all stack in the same direction. When you see that kind of multi-factor agreement, that's when the highest conviction trades happen. Now here's what you do next. If this breakdown earned its spot in your feed today, smash the like button. It actually moves the needle on whether YouTube shows you the next one. Tell me in the comments, taking it or fading it? Trade safe out there. Tomorrow's scan is coming. Tomorrow morning, the AI scans the entire market again, and I drop a fresh breakdown on whichever ticker ranks highest. Could be a stock, could be crypto. Join the channel and turn on the bell. That way tomorrow's video actually reaches you. See you in the morning.